Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. And much of this week, we had tariffs between China and US, some good news there, but a lot of inflation data. CPI came out on Wednesday. Inflation was up modestly for the month of July, but the market was hit with a bit of a gut check on Thursday morning when we had producer inflation. Think wholesale prices, commercial prices were higher than expected, and the market sold off a little bit. But overall, we had a very positive week in terms of price action, and a lot of that was buoyed by global equity inflows reached their 6-week high at the midweek mark. A lot of it related to those factors of the China-US tariff truce, along with that favorable inflation report. And speaking of inflation, this is the CPI. This came out Wednesday morning. Consumer inflation was up month over month, 0.2%. It was widely in line with expectations. You saw energy prices bring down that headline number because when you looked at core, remember, core is excluding food and energy prices, which are a little more volatile. That was actually up 0.3%, its biggest since January. So there was something to like or dislike about this report, depending on the side of the fence you were looking at. Services, think airline fares, healthcare costs, dental services, they were still pretty elevated in terms of inflation, but you saw other areas like inflation and the overall headline number of inflation come in as expected, and nothing alarming that might keep the Fed from cutting rates. And after this report, remember, we had that really poor labor market report and downward revisions of jobs the past 2 months, just a couple of weeks ago. Following that report, you saw odds go up of potentially even a 5-10% chance of the Fed actually making a 50 basis point cut after this inflation report. Market widely rallied during this inflation report as it was released. The one thing to keep in mind, it'll be kind of interesting to watch, is due to resource availability, the Bureau of Labor Statistics, remember, this is the same organization that Trump just fired the head of and is replacing with someone else. Pre-Trump, they've had resource shortages and issues with budgeting for years now, and they've had to really scale back the amount that they can survey, and they've actually been reducing the collection of CPI across different cities and sample sizes quite dramatically. And over the past year, in fact, it's actually increased. The percentage of this report that is what I would call estimated instead of just actually retrieving the actual underlying data has increased from 10 to 32%. I don't think it's alarming in terms of this data is wrong, but it's just something we need to keep in mind is that the data collection here is not as solid as it was a year ago. Now, market rallied on that CPI report, and market sold on Thursday's report from the PPI report, and that is the producer side. So these are what companies are paying for goods and services that they need in the manufacturing or whatever process they're in that business. And producer inflation was much higher than expected. And you can see on the chart here, the month over month gain of 0.9% was the highest since July or June rather of 2022. This was above expectations. And furthermore, as I talked about, some people were starting to talk about, hey, the Fed's going to do a 50 basis point cut in September. That chatter calmed down a little bit on Thursday. And now we're seeing kind of no odds of a 50 basis point cut and about 80-90% probability of a 25 basis point cut at that September meeting. So this kind of brought down the mood a little bit that, hey, inflation is not going away completely here. Now, global equity inflows, and I'm going to point you to the bottom right corner before I make this point here. It says August 13th. That's not the end of this week, August 15th. They track these flows on a weekly basis as of Wednesday. So what's important about that this week is that was after the truce between China and US tariffs. They extended that truce another 3 months. And it was after that CPI report, but it was before that PPI report. So keep that in mind. We might see the impact of that next week. So with that said, on August 13th, the weekly trailing 1 week, we saw equity flows of 19.3 billion. That's significant because that's the highest in 6 weeks. You can see the past month here, the past 2 weeks, in fact, have actually had negative flows. So a lot of that was related to that China-US extension. In fact, when you looked at what sectors, technology-focused funds within the equity market tended to be the ones that received rather the almost entirely the highest portion of those overall flows. So you saw that massive inflow to tech, a lot of that related to that tariff de-escalation. And Apple, for example, and those big tech stocks were components for those phones. Those were reduced as part of that negotiation. So overall, good week for equities. We finished about up 1.5%. Here Friday, we'll see how we close, but good week for equities overall. So Qantas, some of you might not be familiar with this, but they're planning to launch the world's longest nonstop flight, 20 plus hours. Right now, the record, I think, is around 17 hours. And that flight will move from Sydney to London. This was actually announced probably about 5 years ago, and they were expected to launch in 2025. There has been some delays. They've done a lot of testing research flights. That is now expected during the first half of 2027. What's interesting here is these nonstop flights are going to have stretch zones, extra leg room, wellness zones, really trying to make it as comfortable as possible for you to be in this flying metal box for 20 hours of your life. But hey, the alternative is maybe you've got 3 or 4 layovers in random airports. You've got to check into hotels and things like that when you're traveling that long. So I'm really interested to see as technology improves with these long haul flights, the amenities around them. Does it make it easier to travel to longer areas from different cities around the globe? Because some of those layovers and those nonstop, it just make it very, very difficult unless you have an extended time. So kind of encouraged and excited to see what this means over the next 10, 20 years. All right, with that, I want to thank everyone for watching, and I'll see you next time.